Welcome back to Alpha Recap. I'm glad you joined us after the close. Today's session was a tech-led risk-on day, and as always, if you have questions, you can reach us at stockalpha.ai. Let's dig in.
Thanks for having me. It was an interesting tape. The S&P 500 closed up about 0.75%, and the NASDAQ 100 closed up just under 1%. Meanwhile, small caps basically sat on the sidelines and finished flat.
So, what really stands out here is that split. Large cap tech did the heavy lifting while the rest of the market lagged. Why did we get that selective rally?
A few things. Positioning ahead of Fed signals and economic prints pushed traders into long-duration growth names. At the same time, sector headlines created pockets of buying, like materials tied to critical minerals, and pockets of selling, especially in the cannabis group.
When you step back and look at this, saying the Fed path favors long-duration tech. Explain that in plain language for listeners.
Sure, long duration simply means companies whose profits are expected further out in time. Think big cloud and AI players. If markets expect interest rate pressure to ease or stay steady, those future profits become more valuable today. So investors bought those growth names on the view that real rates might have a longer runway to fall.
Right. And the other thing is, small caps being flat signals something different, yeah?
Exactly. Small caps often tell you about broad economic confidence and cyclicals. When they're idle, it suggests the rally was concentrated, not broad-based. That's a caution flag for anyone hoping this was a clear, market-wide risk-on.
Let's talk sector by sector. Tech-led. What stood out inside the tech group?
Large-cap software, cloud, and data center names outperformed. Investors rotated into companies tied to AI, cloud infrastructure, and secular software adoption. Basically, the plays that benefit if AI compute demand keeps rising. That concentrated buying pushed the NASDAQ 100 a bit more than the S&P.
And materials. That theme surprised a few people today.
Materials and mid-cap miners tied to critical minerals caught a bid. You had renewed attention on mineral security, onshoring, and incentives for supply chains. That narrative, energy transition plus policy support, brought buyers into certain mining names.
Hold on, say that again? Why would government talk move miners so quickly?
Policy commentary can change expected future demand for minerals used in batteries and renewable infrastructure. If governments hint at incentives or tighter supply policy, investors expect higher future prices or more contracts for miners, which lifts their stocks today.
Got it. Communications and media were active too. That was filings-driven, right?
Yep, several 8K filings and corporate developments, including activity around Paramount-related items, created tradable volatility in communications and media names. Those kinds of filings can change expectations on deals, governance, or cash flows, and traders react fast.
And crypto and bank flows played a role?
They did. Whales moving positions, banks updating coverage, and a few upgrades helped buoy crypto-related equities and payments names. When that happens on top of a risk-on tone, fintech and payment names can get pulled along.
But not everything was rosy. Cannabis had a rough day.
Yeah, that tracks. A regulatory clash sent cannabis names lower across the group as traders paired positions into headline risk. That sector is still very sensitive to state and federal regulatory shifts.
Short reactions. Right.
Yeah, absolutely.
Let's walk through some of the notable individual movers you highlighted. Start with that under-the-radar AI/data center play.
Poet got renewed attention as an AI and data center interconnect play. A bullish note and signs of hyperscaler demand helped the stock rally on the idea that data center upgrades for AI compute could extend beyond the biggest tech firms.
And Cogent Communications?
Cogent's 8K and continued network demand supported the name. Telecom infrastructure and bandwidth plays benefited from rising traffic and cloud workloads.
Blackstone had a filing too. What was the angle there?
Blackstone's filing, related to a private credit fund, drew attention to size and regulatory scrutiny in that market. Investors cheered some clarity, and the stock moved higher as people priced potential implications for leverage and liquidity in alternatives.
You also mentioned Dine Brands, Paramount filings, and a healthcare REIT. Short bursts of corporate news.
Correct. A sequence of 8Ks across consumer, media, and healthcare real estate investment trusts created discrete moves as traders reconsidered governance, asset sales, and capital allocation. Those are the micro-level stories that add up intraday.
Other quick hits. IAC Inc., Armstrong World Industries, Skyline Bank Shares, all filed notices that bumped their stocks. Corporate news matters when volume follows.
And the number that really caught our eye on the index side, the S&P's gain pushed it further into the upper half of the recent range, which technically reinforced near-term momentum.
Let's clear the throat and move into the technicals and what traders were watching next.
From a technical lens, the S&P's move into the upper part of its range signaled momentum, but the NASDAQ 100's outperformance reflected concentrated mega-cap buying. The lack of a small-cap breakout is the missing breadth. That's the thing that needs to improve for a confident, broad-based bull case.
So what were traders going to watch when markets opened again?
They were watching a few things: incoming inflation and labor data, any Fed speakers, and earnings or corporate catalysts. If data and Fed speak lean dovish, tech-led moves could extend. If there was a hawkish surprise, leadership might rotate back to defensives and names with clearer earnings visibility.
Trade idea summary in plain English?
Overweight high-quality, earnings-resilient tech and select materials and miners exposed to critical minerals. Keep some defensive allocation until small-cap breadth and cyclicals confirm strength. Not advice, just a framework for thinking about risk.
Quick reactions. Honestly, I was a bit surprised by this one.
Yeah, same here.
Final takeaways for listeners who want the short version.
1. Markets closed up overall, but gains were concentrated. Big tech led the way. 2. Materials tied to critical minerals got real interest on policy chatter. 3. Small caps being flat means breadth wasn't strong enough to call a broad market breakout. Keep an eye on the Fed, economic data, and headline-driven sectors like cannabis and communications for tradable volatility.
Great. If you want to follow any of the filings or names we discussed, you can find the links and nightly notes over at stockalpha.ai. And, as always, if you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly, and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you after the next close.